Hello, everybody. I have an announcement. The podcast is moving to Spotify.
The Joe Rogan partnership changed the narrative about Spotify in the eyes of investors. Since Spotify announced the deal, Spotify's market cap is up $23 billion. The stock price has soared from $169 to a new all-time high of $290 per share. Spotify is no longer just a music streaming platform, it's the world's largest audio platform. Hi, I'm Christian. In this video, I'll show you my intrinsic value for Spotify with my discounted cash flow valuation. If you'd like to see more valuations like this one, go ahead and like this video and subscribe to my channel. I really appreciate your support. The podcast partnership with Joe Rogan and other recent high-profile deals with Kim Kardashian and Michelle Obama have convinced investors that podcasting is the next big growth opportunity for Spotify. They've invested hundreds of millions of dollars on acquisitions and partnerships and believe that podcasts help them increase user engagement, lower churn, grow revenue faster, and achieve higher margins than the core music business. Here's what Daniel Ek, the CEO, said about Spotify's shift to audio. As we expand deeper into audio, especially with original content, we will scale our entire business, creating leverage in the model through subscriptions and ads. This is why we feel it is prudent to invest now to capture the opportunity ahead. We want Spotify to continue to be at the center of the global audio economy. A shift to audio and podcasting is a big opportunity for Spotify for many reasons, but long-term profitability is the biggest. With podcasts, Spotify can put out original content like Netflix and not be at the mercy of the three major music labels. The long-term value of Spotify as just a music streaming company is limited because of the high royalties they pay out to the record labels. For every dollar they earn in streaming revenue, they have to pay 70 to 75 cents to companies like Sony, Warner, and Universal. Spotify's royalty agreements are a significant hit to their gross margin. The shift to an audio-first platform and podcasting makes Spotify a really interesting investment opportunity. Spotify's addressable market is one of the biggest in the world because their market is as big as the global smartphone market. Anyone who can pay from their smartphone is a potential customer. There are almost 4 billion smartphone users in the world. By 2024, there's estimated to be over 5 billion. Spotify's CEO believes the market opportunity is in the billions as well.
Globally, we talk about the fact that we think this is an opportunity in the billions. I can't imagine, this not being a billion user opportunity around the world.
A billion users may sound crazy, but I believe Spotify gets to a billion users by 2029 in my valuation. Spotify already has over 286 million monthly active users and 130 million paid subscribers. Over the past few years, monthly active users have grown consistently at 30% per year. To get to a billion active users over the next 10 years, they would need to grow users at a 13% annual growth rate. Of the billion monthly active users, I'm estimating half become paid subscribers because I think Spotify increases the conversion of paid subscribers with their investments in their podcast catalog. There's already over 1 million podcasts on Spotify. Spotify's annualized revenue per user is around $60 as a music streaming platform, but I'm estimating that their revenue per user doubles to $120 a year by 2029. 500 million paid subscribers multiplied by $120 means that Spotify will earn $60 billion in revenue in 2029. Along with the average revenue per user going up, Spotify will increase their gross margin substantially. Spotify's gross margin has ranged from 15 to 25%, and the company has forecasted a long-term operating goal of 30 to 35%. However, this goal reflected Spotify as a music streaming company. If podcasts are the next big growth opportunity, I think the gross margin rises to 35 to 45%. In my valuation, I estimated Spotify can achieve an operating margin of 14% by 2029. Here's why. First, Spotify can increase subscription pricing. This is something that you've seen Netflix do consistently over the years. Spotify's CEO has said they could raise subscription pricing to increase profitability, but he wants to wait until they're no longer focusing on growth. The main reasons for Spotify's falling average revenue per user is from growth in emerging markets where it charges less per month than countries like the United States, and they offer cheaper plans to families and students. A two-sided marketplace is something Spotify has been excited about for a while, but it's starting to become a reality. They only make money from listeners, but that's changing. Artists and music labels can pay to promote their music, and podcasters will be able to promote their podcasts. If Spotify can build a Google-like ad platform for audio, they could also see Google-like margins for their ads business. Spotify can create original content like Netflix, and the beauty of that is they won't have to pay a music label every time someone listens to a podcast episode. The cost of revenue will be much lower for podcast ads and subscriptions than they are for music streaming. Spotify's podcast catalog will increase user engagement, which will help reduce churn and convert more paid subscribers. All of these things will help Spotify increase their average revenue per user and gross margin. So my key numbers for my 10-year DCF valuation are $60 billion in revenue, a 14% operating margin, and a 7% cost of capital, which represents risk. After I inputted the numbers on my spreadsheet, my fair value for Spotify is $249 per share. My valuation tells a bullish story, but it's still lower than what the stock is trading at today, around $290 as of this recording. In my opinion, Spotify stock is trading at a really rich valuation when I'm telling a billion user story and my fair value shows Spotify trading under the current stock price. A lot of future success is already priced in. However, if you're planning on holding Spotify for 5 to 10 plus years, Spotify could be a great investment opportunity. It wouldn't surprise me if Spotify's market cap grows 3 to 6x over the next 10 years. If you enjoyed this valuation, I'd appreciate if you like this video and subscribe to my channel. In the comments below, let me know if you believe in my story or disagree. Bulls and bears are welcome. Thanks for watching.